Okay, in this video we're going to be looking at some recent taxation reforms, starting with changes to income tax. So when we're looking at cuts in income tax more generally, income taxes mainly impact aggregate demand, but they also impact aggregate supply for lots of different reasons. The first one being lower income taxes provide an added incentive to work longer hours or to work harder. So the idea is that when we get a higher disposable income, we may have an increased incentive to work harder, particularly those whose wages are tied to performance, so those who work on commission or sales in sales industries, because they're getting to keep a high percentage of their income, they're more likely to work hard. Other individuals might have the incentive to boost their skills, so people, when we get a tax cut, we're likely to increase our education levels or training, with the idea being that there's more incentive to get this training and education because you're going to get to keep your future income associated with that. That should help boost labour productivity and aggregate supply levels. So people can work longer hours, people increase their effort, people are more likely to get a training and education. It also helps to boost labour force participation. So those that are not currently in the workforce might decide to re-enter because of the increased financial reward of having a job. So there's greater opportunities in terms of wages, disposable incomes from having a job, so they're more likely to engage in the workforce and re-enter the workforce because of the increased financial reward associated with doing so. So it increases participation, people work longer hours, more incentive to gain skills. They can also lead to increased immigration. So what can happen is people might get enticed to immigrate to Australia because there's the idea of you're getting to keep more of your income, and then that can lead to increased labour force participation as well, because there's more people coming from overseas. That promotes competition for jobs, which helps to reduce wage pressures, can also boost productivity, because now you're competing against people from overseas, not just Australian workers. Lower income taxes can reduce labour costs because of that increased labour supply, and that can help by helping to reduce labour shortages and therefore creating more surpluses in the labour market. This would all help to reduce pressure on real unit labour costs, which will decrease firms' production costs and therefore make them more willing and able to supply. Lower income taxes, this is something that not many people will talk about. Lower income taxes can also provide incentives for investment. So if you're running an unincorporated business or a sole trader where you're paying income taxes just in progressive scale as opposed to company taxes, you might be more likely to invest because it works just like a company tax cut. There's greater incentive for you to expand your business via investment spending, as well as that greater incentive to work hard and boost productivity. So lower income taxes can promote investment spending for small unincorporated businesses. In terms of recent changes to income taxes, one you can talk about was increasing the tax-free threshold. So they increased the amount that you can earn before you have to start paying tax from $6,000 to $18,200. The idea of that was to boost labour force participation. It discouraged workers to come back into the labour force, so they may have been unmotivated because of the higher tax brackets in the past. Now they're not paying tax until they earn $18,200. They may come back into the workforce. So that can be particularly low-skilled workers or people that have been discouraged from work. Those working part-time may also decide to work more hours because they're not going to get taxed as much on their income. The other thing they did in last year's budget, so the 16-17 budget, another reform is they increased the 32.5% marginal tax rate all the way to $87,000, up from $80,000. So basically what that means is you're paying 32.5 cents for an extra $7,000 instead of paying the higher 37 cents. So basically you're saving 4.5 cents on anything you earn between $80,000 and $87,000. So it works out to be around 0.045 times 7,000. So it works out that you get a tax cut of around $300 for around 3 million workers. This provides an incentive for middle income earners and high income earners to potentially re-enter the workforce because they're going to be paying a lower rate of tax. So that's an incentive for particularly middle and high income earners. It doesn't really affect low income earners. Other things they've done is reduce compliance costs for businesses. So the taxation costs and administrative costs where businesses are forced to comply with certain legislation, they might be related to environmental legislation or a whole other things just to pay the right amount of tax. They're trying to simplify this system so compliance costs are reduced and businesses aren't wasting as much money, and they've got more time to spend on their core functions, which should help to boost our supply potential. Should help to increase the efficiency of the taxation system so that businesses can fill out all this paperwork at the lowest possible cost and focus on what they actually want to do. Other tax cuts, things like customs duties, excise taxes, GST, they all affect firms' cost of production. But most of these taxes aren't really related that heavily to our aggregate supply. They're more about allocative efficiency and reallocating resources as opposed to tax cuts. Okay, we'll talk about some reforms from the last two budgets in the next video.